Hi, I'm Jim Jubak. If you like this video today, please give us a thumbs up. You can subscribe so you get more, you also get notification of when we're doing more videos. If you want more of my stuff, you can go to my free site and sign up there. And if you sign up, as opposed to just sort of checking it out, which is free, you get all my posts from that site to your mailbox every day at 8 o'clock. And that's jubakpicks.com. My subscription site, jubakam.com, with 6 portfolios instead of 3, and you'll see why those extra portfolios are important. Also, there's a link down to that down below, so sign up, please. Today's video is entitled Death of the Global Economic Order. Subtitle it, Forward to the 16th Century. Way back then, the theory was that you built up a country's wealth by making sure that you controlled all of it. You didn't trade with other people, you grabbed it. So that the Spanish, for example, controlled trade with all their colonies, didn't allow the English or the French to trade with them legally. We, in the 20th and 21st century, for a while at least, didn't believe that was true and believed that you built up wealth by trading freely, and all kinds of theories about competitive advantage, and it increased global wealth if countries did what they were really good at and traded the stuff that they were really good at to countries that were really good at what they were doing, and that built up the global wealth. Well, we've been gradually killing that, and I think that the Russian invasion of Ukraine and the global economic sanctions that are coming out of that have put another nail in the coffin of this liberal, let's all trade with each other economic order. You're a forward-thinking strategic planner in the US or China or Russia or anywhere else in the world, and you're going, the invasion of the Ukraine is over, that war is over. What are the lessons from that? Well, the takeaway lessons are that you don't want to put yourself in the position where a country can blackmail you by withholding its natural gas when you're dependent on that natural gas, by withholding its chip-making technology when you're dependent on those chips. And you say, oh, and going forward, I've got to worry about lithium, I've got to worry about rare earth, I've got to worry about chips, etc., etc. I think what we're going to see, even after the war is over, is a big drive by country after country, as long as we can afford it, to spend money on making sure that their economies are not vulnerable in any of the ways that they are now. It's being billed as a wartime measure, so that President Biden is sort of expanding the application of the 1950s Defense Production Act, originally a Cold War, post-World War II Cold War device that said, hey, we need to invest in strategic materials and the production of strategic materials here at home so that we're not dependent on, say, overseas steel to make tanks, etc. Well, he's expanding it by adding funding for lithium. He's looking at rare earths, battery metals, all those things that have come to be critical to the way that the 21st century economy functions, and saying, hey, the government is going to put money into increasing supply of these when it can, so there'll be increased funding for operations, increased government funding for production and safety. The United States has really large vulnerabilities in this area that we really don't produce much in the way of rare earths, which are used in in magnets that are used in everything from wind turbines to electric vehicles. We don't really produce much in the way of lithium. Some of these areas we're extremely vulnerable because most of the supply comes from countries that we can see ourselves in a long-term competitive semi-hostility with, such as China and its dominance of rare earths. So what we're really looking at is, I think, if you looked at some of these projects on the basis of their sort of return on investment, they might not make sense, but in terms of return on strategic investment, they do. One I like, and I already have recommended this, is a company called LICY Holdings. LICY is a startup lithium recycling company. They recycle batteries. They're building out a huge network to do that. So the stock, as you might expect, given its capital needs, the earliness of its production cycle, its history as a SPAC, it's had a really rocky time. But this chart makes it look worse than it is. We're talking about a slaughter from high of 14 in November down to a low of, where did we get? Oh, 639, merely cut in half. Stock has come back a little bit, and I think what we're going to see is it continue to bounce around here. But if you're thinking about the easiest way really to address some of the U.S. need for lithium and a strategic problem is that, well, if the country recycles lithium, and a lithium battery also produces, when it's recycled, it produces cobalt and nickel, two other crucial minerals that are in short supply in the U.S., you really address the strategic problem. So this is a company I'd look at. I like it on its fundamentals. I think this business makes a lot of sense. It's going to be very capital intensive because you've got to build out this whole network to recycle these things around the country. But they're already got a couple plants up and running. They know that it works. They're scaling them now. So I think this is one that you can get on this kind of drop at a bargain as long as you are a patient long-term investor. This is called MP Materials. They are the only North American producer of rare earth minerals. The economics have never been exactly so great that the company's taken off, but I think the fact that we're now looking at a strategic emphasis on this from the federal government makes this a stock that you might want to own. Clearly the market agrees. We're as low as 33 back on February 2nd. We're up to 58, so that's a nice gain. But one of the things I'd note here is this is still a very early stage company, and its year-to-date gain is only 24%, not bad during a bear market. 1 year you got about a 60% return. The market cap is only 10 billion, so this company is still very early stage. Got a long way to go. And again, I think given what we're looking at, this is a good investment. So thanks for listening. Have a wonderful April Fool's Day tomorrow. If you like this video, please like it, subscribe to my YouTube channel, and if you want to see more of my stuff, you can go to Jubakpicks. That's my free site. More 6 portfolios instead of 3. So more picks, some options, some ETFs on my paid site, and that's jubakahem.com, and you see all that down below. Thanks very much for listening.